Welcome to ShortView Trading, your morning market hit for Monday, 25th of January. What matters today and this week for traders? What's the next big move in markets? That's the question we've been thinking about today and indeed writing about in today's Daily Rag. And by the way, if you're interested in the Daily Rag with all the detail of what we discuss every day and specific recommendations on 1 to 2 week basis on equity market futures, then please do go to the website where you can subscribe to the Daily Rag on a daily basis. But that's the question we're thinking about today. That's what we wanted to talk about in this video. And indeed, it's pretty clear that markets have come an awful long way since their last bout of consolidation, their last sort of sustained pullbacks. You'll remember the market topped on the 2nd of September, had two quite meaningful pullbacks all the way through to October the 30th, where it made a recent local low. And of course, since that time, the markets have been extremely strong. In just less than 3 months, many of the markets are up 20, 25 plus percent. In fact, you can see a flavour for that in the chart in front of you now. And whilst the S&P 500 and the Nasdaq 100 have lagged many other parts of the global financial markets, they're still up around 16, 17% in 2.5, 3 odd months. So markets come an awful long way very quickly in the last 2 or 3 months, and with that a lot of excess has been built up. And you can see that excess in all sorts of areas of the global financial market. Look at some of the Asian equity indices we're putting up in front of you now. For example, the Hong Kong's Hang Seng, very strong just this year, and of course very strong since those 30th of October lows. But really in the last few weeks it's gone somewhat parabolic, a bit like it did just ahead of that January 2018 pullback. You remember the S&P 500 global markets peaked on 26th of January 2018 and sold off quite sharply. But of course that peak happened after a bout of excessive enthusiasm and exuberance in financial markets. So there's the Hang Seng in Hong Kong, you can look at Vietnam, you can look at the Indian markets, some of the Chinese markets. Many of these charts have gone somewhat parabolic in the last few weeks. That's a classic sign of excess ahead of a pullback. And there's plenty of other signs of excess. We've been flagging up the volume of call option trading in recent weeks in many of these videos. And you can see from the chart in front of you now, it's back up to the sort of levels it was at around the June highs. You'll remember there was a big sell-off starting off in early June back in last year, the first sell-off post the rally out of the bear market. And with all that financial market excess, signs are starting to build that things are starting to look a bit toppy. And in particular, for example, if you look at something like the Colvin model, which measures across a range of global financial assets how overextended they are to the upside, and then aggregates sums, scores, aggregates and sums all of those indicators together. This is back at its sell levels. It's sort of rolling over from that in the last few trading sessions, but generated a signal not too long ago in the middle of last week, indicating that across global financial markets, things are overextended. It's not just 1 or 2 indices in Asia. It's quite a broad-based observation. And then added to that, you look at the price action of Bitcoin. As we like to flag up in these videos, Bitcoin's a pretty good leading indicator of the S&P 500. At key turning points in recent years, Bitcoin's moved about 2 weeks ahead, 2 to 3 weeks, something like that. Of course, there's no precise science in the number of days, but the point is Bitcoin's at the edge of speculation. It's the edge of the speculative liquidity out there. So it's a very good leading indicator on when liquidity's slightly starting to tighten up. And of course, Bitcoin, as you'll be aware, topped on the 8th of January this year, and it's been really quite weak since then. So if it does what it's done in the last few years, it's telling us the S&P 500 and global equity markets are getting toppy. And thirdly, I point to our sell-off indicator, which has a very good track record of picking local highs in a timely manner and warning of waves of risk aversion, potential pullbacks. This indicator is very close to generating a signal. So what's the next big move in markets? Well, to see our full view, please see today's Daily Rag, available to subscribers via the website. So what are we watching this week? Well, there's all sorts of stuff going on, but the Fed on Wednesday is key, as always. We expect a reiteration of their dovish stance. Over and above that, it's virtual Davos this week, so lots of policymakers speaking throughout the week, amongst other key distinguished featured speakers. Added to that, fourth quarter earnings in the US continue, corporate earnings throughout the week, lots of key stocks releasing their earnings this week, including Apple. And then over and above that, lots and bits and pieces of data, including some US housing data, amongst many other bits and pieces coming out over the course of this week. So that's it from us. That's your morning market hit for Monday, 25th of January. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.